Hello, everyone. Welcome to today's session. So, today we are starting with a new chapter, that is chapter number 6. So, I hope everyone has gone through this chapter and read it, as we discussed in the last and previous session that you have to read this chapter. Okay. So, that is very, very important. Because now what we are going to discuss, whatever we are going to talk about, is if you have read the chapter, it will really help you to understand that. Okay. So before I proceed, before I go into the detail of chapter number 6, anyone previous sessions or previous session that we discussed, any doubt on any of the point of previous session? Nope. No doubt. That is very important, and that is we need to understand. So first we will be starting with a SA 560 and its special scenario. So can anyone tell me what is SA 560 about? Anyone?
Subsequent event, sir. Good evening, sir.
Good evening. Yes. So subsequent events. Okay, great. Yes, absolutely correct. Correct, Sanjay. Subsequent events. Now, what it says, why we have an essay on subsequent events? Can anyone tell me? Why
Sir,
do
it
we
is
have a
related to
standard? Yeah. Sorry, yes.
sir, subsequent event means any event which event occur after 31st March and before the audit report period. That is called, that comes under subsequent event.
Okay, great. Yes.
And it will be of kind of two types, one adjusting event and one non-adjusting event.
Great. Okay. So you explained very well the term subsequent event and its definition. Absolutely correct. Now the question comes is, why do we have a standard on that? Why we need to understand the subsequent event and its implication, like what are the subsequent events, and why it is relevant? What is the reason why? Okay, I understood subsequent events type of it, perfectly fine, but why it is important in the audit?
Sir, even that would have cost to amend the audit report because of that event or conditions.
Okay.
So some events may have happened, which if we had the knowledge of, we would have disclosed it in our audit reports. So to provide the auditor with an opportunity to either disclose them or to request for the management to disclose them in the financial statements and subsequently reflect them in case they are not issued to the shareholders. So we are having this standard.
Okay, perfectly fine. Yes, great. Anyone else would like to add to this, like why we have a standard on this? No, not an issue. You guys are absolutely correct, but there is something more to it that we need to understand. Okay. And the moment I say subsequent event, first of all, we need to understand. Like we discussed, okay, there are two types of subsequent event, adjusting and non-adjusting one. But now we need to understand what actually the subsequent event means, from where it starts, where it ends, what to do when. Okay, and that we will understand with one example. One good example, and I'll take it here itself. Okay, so let's assume I'll create a timeline. Okay, we have a timeline. Now, let's say here we have a 31st March, okay, 2025 as a date. Here we have a 30th June 25 as date. Then comes to, let's say, 31st of August 25, 30th September 25. Okay, and it will go on. Now I'm just giving you some key dates. That is, one, this is the financial year close. Everyone knows financial year close, 31st March 2025. Great. This is the June quarterly reporting. Okay, assume this is a listed entity, so June quarterly reporting. 31st August 2025 was when the audit report signed. Hypothetically, we are assuming the audit report got signed on 31st 8 2025. AR signing. Okay, and 30th 9 was the hypothetical assumptions. I know usually after 30th 9 you have 1 month or some days to get the report, but as of now, September quarter reporting is happening. Okay, so these are certain dates that we have taken. Now tell me from where to where you will count a event as a subsequent event. From where to where?
Sir, even after occurring that the balance sheet date, that is 31st March 2025 to audit report signing, that is 31st August 2025, those period is called that subsequent events.
Okay, so you are saying from financial year close till your audit report signing. This period is a subsequent event. Okay, as of now, I'll mark it as a subsequent event. If this is the period I'm talking about as a subsequent event, just before we engaged, we started the discussion, we got a definition is something after signing of the audit report. What about that? Are those not the subsequent event?
That is also a subsequent event.
So that means from the start of the financial year, like from the close of the financial year, we have like till what date? Like in that case, this diagram will be incorrect. Okay, I'll remove it. So where I should mark the subsequent event? From where to where? Let's say I give you one more date over here. That is
Till
31st.
audit report is distributed.
Audit report is distributed.
Issued.
AR signing, or let's say plus 2 days you will get the issuance of the audit report. So signing plus issuance, I'll write it over here. Signing plus issuance, same date. For simplicity, I'm taking same date. Where should I start the subsequent event? Like pretty much we know that the start should be from 31st March. Where it should end, that is the main question. Where? Till 30th September, till 31st March 26, or till AR signing? Where will you end? Okay,
Sir,
tell
it's
me one.
till AR signing date.
AR signing date. Okay. So anything beyond that is not a subsequent event?
No, that is a subsequent event.
So if I'm taking, see, I have to classify, okay, these events are subsequent events, beyond which there is no subsequent event.
Because auditor can ask the management not to distribute the audit report if he has signed it also, so that event is also a subsequent event that way.
So where should I stop? Like that's the question. Like I should have stopped the subsequent event calculation at 31st of August, 30th September, a month after that, 31st December, 31st March 26 next year, and closing of financial year. But where?
So till the date, this report is not distributed to the
Correct.
shareholders.
Okay. Let's say, for example, till the date the report is not distributed to shareholders. For a simplicity purpose, I'll take the AR issuance and signing date. This one. So the date when AR audit report was signed, issued, and distributed to shareholders via email. I'll take this one. Okay. So as per like the discussions, what we are getting is this is the subsequent event.
Yes.
Beyond this, there are no subsequent event.
Which can be incorporated in the audit report. I mean, subsequent events we are looking at which can be dealt with in the audit report.
Okay. But let's say, for example, if any event happened beyond this date, what will happen then? I will not incorporate an audit report, but what I will do for that?
In notes to accounts, we have to disclose this.
Okay. I will add up some more. So let's say this is subsequent event 1 for the simplicity and understanding. This is subsequent event 1. And from here, let's say, as for the sake of simplicity, I'll mark as like I'll take 31st March as of now. I will mark subsequent event 2. Okay. So what should be the treatment for the subsequent event 2?
Sir, when the fact become known to the auditors, then his responsibility to check and he have to verify that he is not need not do the complete audit procedure. But
Okay.
if the event that would have caused to the amend, then he has to consider those items.
Okay.
I mean from after 31st August 2025, any event which the fact become known to him, the auditor, in those cases which is caused to amend the audit report, definitely he will do that. There are different situations are there. If he himself found out, if the management is wanted to update and amend, there is no issue. If they are not able to do that, then definitely if the report is issued, then we can ask the management to recall the report. Like the legal advice also. If that particular amendment is needed by the law or applicable accounting framework, if require not to modify, then there is no issue. If allows, then we can amend it.
Okay. Okay. But in that case, yes, Prashant.
So, if after issuance of audit report, but before the issuance of financial statements, then the auditor will ask the management. I mean that if there are that why these events were not disclosed to him, and he can only respond appropriately. He cannot amend the audit report once it has been issued, and he can ask management whether it was intentional or not, and he will consider the impact as per the legal advice received as per the law and take appropriate action.
Okay. Okay.
Sir, it has to be responded appropriately, sir. The thing is that there is no doubt at all from 31st March 2025 to 31st August 2025, this is a subsequent event. That is restricted up to that level. But which means it's not stopping the auditor responsibility to check any fact is known to him beyond that level, but before it is issued to the shareholders or third party. On those events which need to respond appropriately, those events need to be dealt. If the applicable accounting framework is allows, definitely he can amend and he can issue that. Then accordingly, that audit, that financial statement also they will review and update by the management. But that audit report also should not be prior to that financial statement what is updated. The amended audit report, the auditor are eligible to issue. For that line item alone, he can able to do the subsequent appropriate audit evidence. He can check and verify, and he can do the audit procedure.
Okay. Okay. See, now we have to go to little basics here back, and we need to understand few things. Okay. The way we use the term subsequent event, that we need to understand in much more detail now. Because here if you see this definition of the subsequent event, like this is like, first let's understand what is subsequent event. Now subsequent events consist of two things. Number one is the events that we are talking about up to the date of audit report. So when I talk about subsequent events, it comprises of events occurring between the date of financial statement and the date of audit report. Okay. So when I talk about here, like type 1, subsequent event 1, these are actually events. So instead of subsequent event, I can write events between FS date and AR date. Now the question comes is, after that, like I said, there are two things in the subsequent event. One is the events that are between FS date and the AR date. Now, what is the second thing that comes under the definition of the subsequent event? And that is very important part that we need to understand. Okay. And that's where, a lot of times we incorrectly quote as events. So beyond this date, we are not required to check for the events. But beyond the date of the issuance of the audit report, once the audit report is issued, okay, now we are only required to check about the facts. Now, which facts? That is we need to understand. So the facts, if that become known to the auditor after the date of audit report, if they have been known to the auditor at the date, may have caused the auditor to amend the report. That means as on date of that particular report, if that fact, I'm not talking about event. Okay, I'm carefully, I'm talking about event before the audit report. But once the audit report is signed, now we are coming to the facts. There is no more events involved. But I'm talking about the facts. If known to me earlier at the date of signing or before that, and would have caused me to amend the report, that will become part of these subsequent events. Okay. So the second element of the subsequent event is facts, not the events. And that's where we a lot of students get confused and they write no events after the date of audit report. We are not talking about events, we are talking about facts. There's a difference between facts and events. Facts after date of audit report, okay, if known earlier, would have caused to amend my audit report. Now these are the two things which are my part of subsequent event. Now the second question can come is, so till what time I should look for these facts? Like if I have to look for these facts, what time I need to look for the facts? So there is per se no timeline that after the signing of audit report, after the issuance of the audit report, and till what time you should look for the facts. But I'm talking about only facts, not the events. Okay, because there is a difference between the term event and the term fact. There's a difference when we talk about the term events and the term fact. Okay, events, when we talk about, ordinarily are events for which conditions have existed at the date of financial statements. Like if there is an event, you have a evidence available at the date of financial statement. And there could be a non-adjusting event for which there was no information available at the date of financial statement, but still they are major. They are arising after the date of financial statement, but they are of major nature, like they are of critical in nature. Okay, so that depends upon my financial reporting framework, like how they define these things. But basically it is the same. Like events, if they have the evidence as a date on the financial statement, they are known as the adjusting events. And beyond that, if the event was not having any evidence on the date of financial statement, it will become non-adjusting event. And the financial reporting framework deals both the events separately. One requires adjustment, one requires only disclosure by way of notes. Okay, so the former one or the earlier one requires adjustment in the financial statement. The later one doesn't require. It requires disclosure by way of notes. And that's where my event ends. When I issue the report, events actually ends over there. Now we will only talk about the facts. Okay, so the subsequent events is not only about the events, it's about the combination of the events and the facts. Combination of the events and the facts that are there. Clear this one?
Yes, sir.
Yes, sir.
Okay. Now, when I talk about a fact, that definitely means that it is related something to the financial statement of your previous year. Okay. Information I'm talking about, the term fact. Okay. But it is kind of a scenario, it is kind of an information which would have caused you to amend the report. It is a fact, not an event, something occurring after. What is an event? Like, can anyone define what is an event? When you talk about an event in subsequent event, what is an event? Anyone?
Like fire occurred in a factory and all, which
Mhm.
causes major destruction to the goods and all.
Okay. Yes, fires. Some event has happened. Okay. Anyone else? What is the event? Like, if anyone can provide me, something is occurring after the date. Okay. And what is fact? Now, what do you understand by the term fact? Anyone? What is fact? Like, I'm talking about facts after the date of audit report. What is fact then?
Fact is some information about something.
Fact, if you go by the term itself, fact, it goes within that, exact information. That refers to the exact information. There is nothing happening. The thing was already there, just not known to you.
Legal case, sir. Litigation case.
Yeah. Yes. If I talk about the fact, it is the information which was already existing. It is not something which is created. See, event may occur which was not there earlier. Fire which was not there earlier occurred. But when I talk about the fact, fact was already there but not known to you. It is not something that, fact was not earlier there, now it is there. So that is the difference between the fact and the term event when we talk about the subsequent events. Okay. And as I say, auditor has to deal with the two things separately in a different way. That's where we have this particular standard. If you see the objective of the auditor, it specifies appropriately. What it says that you need to obtain sufficient and appropriate audit evidence about whether the events occurring between the date of financial statement and the date of auditor report that require adjustment or disclosure, adjusting, non-adjusting, in the financial statement are appropriately reflected in those statements. So first of all, for the facts, if it is adjusting, whether it has been adjustment has been done, if it was non-adjusting, whether you have the disclosure or not. Okay. So adjustment or disclosure on the type of the event. But this is talking about the events specifically mentioned, event occurring between the date of financial statement and the date of audit report. You need to obtain evidence for that. Now, when we talk about facts, the objective of the auditor is to respond appropriately to the facts that become known to the auditor after the date of report. Okay. And had they been known to the auditor at that date, may have caused the auditor to amend. Now, let's say, for example, there was a fact which was something like, management does not disclose to you they had that very big contract for the future. Like when you were doing going concern assessment, management already had a very big contract, but any which ways you issued that okay, the going concern assumption is fine because there is a supporting by the uh, group company, parent company, and you said okay, there are material uncertainties, but the use of going concern assumption is appropriate. Okay, now you came to know that no, management has very big contract in their hand, which like could have removed the doubt on the material uncertainty. Okay, which could have removed the doubt on the material uncertainty. Now the question comes is, are you required to amend the audit report based on this fact?
Yes, sir.
No,
Usually
sir.
no.
No.
Usually no, because material uncertainty is still there, but the earlier reason for appropriate using of going concern was parent companies support. Now there is a contract support, future contract support with you. So usually it will go to no, like there will not be any amendment. Now if there is no amendment required, you are not required to do for anything for that. That will not be part of your subsequent events. Although a major information, but still you will not do anything and it will not become part of your subsequent events. So only those events which may have caused the auditor to amend the audit report, if known earlier, if known earlier, or if known at the date of audit report, at that date. Okay, so if that was known at that date, that is the auditor report's date or before that, then only you need to respond appropriately to the facts. We will understand what is respond appropriately, and we will understand what is to obtain sufficient and appropriate audit evidence. So in the first case, our job is to obtain sufficient and appropriate audit evidence, quality, quantity. Second, we are required to respond to the new information that has been in your hand. Okay. So now let's understand how and what we can do to gather sufficient and appropriate audit evidence. So first of all, tell me what you will do to gather the sufficient and appropriate audit evidence to understand whether all the adjustments or all the disclosures have been made or not. So what you will do? How you will gather that evidence?
So he will identify the event, understanding of the event, discuss with the management, then he will perform specific procedures, whether these have an impact on the financial statements, and he will have to check the minutes why the management has not identified these events, and then he will further see whether which events have to be adjusted, which have to be disclosed.
We will read minutes of.
And verify whether they are
Mhm.
properly adjusted as per applicable reporting framework.
Okay.
Sir, read latest interim financial statement.
Yes, very good. Yes, very good.
Firstly, what I will do, I will design and perform the audit procedure to obtain sufficient appropriate audit evidence and perform the additional audit procedure for that as well. Then obtain the understanding of the procedure that performed by the management for identification of the subsequent event. Then we'll check what are the events they identified and they enter into the which affected the financial statement and what are the disclosure they have done. If the management is not able to identify that any information, then auditor ourselves they can also check. If management not identified, then definitely he can refer that minutes of the meeting, board of and all other meeting. If there is listed company, so many meetings committees are there, like audit committee meeting, remuneration and nomination committee, like the risk management committee, like that. So many committees are there as per the LODR as well. We can refer all the meetings and the minutes, and also that the interim audit report. There also we can identify. Then the internal control audit, the internal audit report is there, from where we can identify and check it. We can find out is there any subsequent event which is not disclosed by the management.
Okay, apart from reading for the minutes and interim audit report, so there are two things which we have commonly discussed. One is the reading minutes. Second is the interim reporting. Apart from that, what you can check, let's say it's a listed entity, so minutes of all the meetings you've gone through, you have gone through the interim financial reporting. What else you will check?
Procedures established by management for identification of subsequent event.
Sorry, can you repeat again?
Procedures established by management for identification of subsequent event.
Your voice is breaking. I'm sorry, not able to understand.
Procedures established by management for identification of subsequent events.
Okay. Okay. Yes. Okay. Great. What else?
So,
External counsel, external counsel or in-house counsels, these reports.
Reports.
there are, oh, sir,
The correspondences reports with the external and internal counsel, whether if there are there, which may pertain to these events, if they are there.
Okay.
and also we will check that any whistle mechanism is there, some whistleblower. There also we can check it out with related to any fraud. So fraud is happened or not, like that. Also that we can check that communication, which means that the physical communication, the post what we received from the outside third parties. And if there is a legal counsel is set up by the company, we can check with them. We can get that information if any. The external legal counsel also we can go and check anything is there.
Okay. Now the question comes is, see, now here, if you talk about getting the information, studying the information after the end of financial year, that is beyond 31st March, why management would agree with you to why they would say that okay, we are ready to provide you that information when your audit period is ending on 31st March? Can you ask and management will provide me the details of the financial statement or any financial transaction as on March, or sorry, as on August 2025? Why they will provide to you? Management say, let's say for example, when you talked about okay, let's say you ask management, uh, we want to read your minutes, meeting of the minutes after the close of financial year. Let's say the minutes, the meetings which happen in the month of July. Give me your minutes of those meetings. Management denied. It is beyond your audit period. Now what you will do?
We will already include in terms of engagement that we can demand such information in advance.
Absolutely correct. That's where your terms of engagement comes. Your terms of engagement prescribes, like, there is a standard on terms of engagement. Do you know which anyone, if I can name that standard?
Yes,
210. 210.
210.
Yes, absolutely correct. SA 210. Okay, so there is a point even in the standard plus that is ask us to include in our engagement letter. Those are known as the precondition for the audit. That is access to all information of which management is aware about and relevant to the presentation and preparation of the financial statement. Additional information that the auditor may request from the management for the purpose of audit. If it is for the purpose of audit, if it is additional information, that is a precondition to which they already agreed. Unrestricted access to the person within the entity from whom the auditor determines it is necessary to obtain evidence. So you already go and ask management that management, you already agreed to the preconditions of audit. And as a result, you are required to provide these details because these are necessary for the purpose of my audit. That is already agreed in as per SA 210 when you prepared your engagement letter. Okay, so now management has to provide you. Otherwise, what will happen is, let's say tomorrow management denies, I'll not provide. What will happen?
Restriction, then it will be a restriction imposed by management.
Yes, and
then it will be called as a limitation. See, when they agreed earlier to provide the information, now currently they are restricting to not to give the information, which is it's a limitation provided by that management. In that case, definitely the auditor cannot verify that, cannot obtain the sufficient and appropriate audit evidence for those. The material effect also he will not know known. The uncorrected misstatement will be there.
yes, absolutely correct. So it will be a limitation on the scope of the audit. Okay, that management, even after agreeing, is not providing to you. Now there could be options, there are scenarios. Either you can withdraw if permissible. If not, then you need to think on the modified opinion. Okay, so that is one of the scenario that is there. But as I said, like, you need to be aware that okay, we already agreed on this with the management as per SA 210. Now management's turn is to provide us that information. And you have correctly said that minutes of the meeting, external legal counsel, records, all these things we will check. For example, if I give you some more things that we check is outcome of the provisions that is there, then budgets, internal, monthly budgets, monthly MIS reporting that is prepared by the management. So we go and we check the MIS reporting which is prepared. Then we also verify other sales target that has been whether met or not met by the management. For example, let's say management decided to meet the sales in the first quarter. Like, what was the outcome of that? Whether management issued any new product, and what is the outcome of that, or something, so that if there is any related information which is related to the audit of the previous year, we can look into that. Liquidation, mergers, acquisitions, deals finalized by the management after the close of year, whether there was any evidence before the year. A classic case where management took a huge advance from a particular company. Okay, there was an advance in the books of accounts. It was advance for sale of goods. Later on, it was reclassified as an investment, and management issued new equity shares in front of that. In the subsequent year, it changed. Management reclassified that advance and issued new equity share in front of that. Any guesses why that was done? First, that was done first to boost up your balance sheet, your net asset, for XYZ reasons. Okay, so they tried to boost net assets by showing that okay, we have a very good order booking in our hand that we will comply in the next year, and because of that the share price pumped up. Now with the pumped share price, they issued new share at a high valuation. so that the amount received in front of that, they have to pay very less number of shares. So all these things, like, you have to go through the records to understand what was the actual scenario, whether that event, the condition of that event was present on the date of the financial statements or not. Okay. So yes, we will perform audit procedures, like for example, understanding the process that is set by the management itself. Management, how do you identify that you are covering all the events that are occurring after the date of balance sheet or the financial statement in your books of account? What procedures you have set up to make sure either an adjustment is made or necessary disclosures are made for the events occurring after the date of balance sheet? Plus, your own procedures at times covers those scenarios. For example, let's say there was a huge amount paid by the company. In one of another example, if I talk about huge amount paid by the company as a kind of penalty after the financial year close. So company paid somewhere in the start of the May very huge amount as a penalty to a particular government department, let's say income tax authorities. Now, this amount which was paid, there was no provision anywhere in the books of account. How the team came to know about this was when they saw the quarterly reporting which was done for the June quarter. There was a drastic decrease in the cash balance or the balances that were there in the books of account, and there were some amount paid under dispute or due to governmental authorities was there. And by that way they came to know that, okay, why there has been drastic decrease in the cash balance in this just 3 months, what happened? And upon investigation, they identified there was a litigation going on. The litigation came unfavorable, the outcome was unfavorable, and company had to pay a very big amount. So by this way you can go and check actually what is happening. Understanding of the management procedures, inquiring where you identify something critical or something which gives you that, okay, there could be something more to this. Reading minutes, documents, budgets, subsequent financial statements, interim financial statements. Then you can go for the MIS, acquisition mergers document, or something like that. And then once you do all these things, and once you gather all the evidence in your hand, then you can say, okay, now I have a sufficient and appropriate audit evidence in my hand whether there is an event or not. Clear? Any doubt with this?
No, sir. Clear, sir.
Okay, so pretty straightforward with respect to identification of the events is design and perform audit procedures. Like it could be multiple audit procedures. For example, you need to obtain understanding of the how management is doing, how management has is identifying subsequent events. Okay, read the minutes, read the entity's latest subsequent interim financial affairs. Okay, whether any subsequent event occurred which may affect your financial statements, like by going through all these things. So you understand that, and then you decide whether you identify something or not. Now the second question comes is, what if you identify an event? Anyone? What if you identify an event?
Sir, after identifying the subsequent events, we need to check whether the subsequent event that requires adjustment have been properly adjusted appropriately as per the applicable framework of reporting financial framework, and also is appropriately is disclosed.
Okay. Okay. Anyone else? What you will do once you identify that event? Yes, absolutely correct. Yes, Sanjay. Very good. So our objective tells us what to do. It's nothing else we need to do. It is the objective itself says us what to do. Make sure the adjustment and the disclosure in the financial statement are appropriately reflected in those financial statements. Simple. So whether it's an adjusting, non-adjusting, go to your financial reporting framework, decide, and then decide adjustment of disclosure. And whatever you decide based on that, you check whether it has been appropriately done or not. Clear? And see, till this time you have audit report in your hand. You have not signed the audit report. You are not issued the audit report because we are talking about events occurring between the date of financial statement and the date of audit report. So if something you identify for which a disclosure was required or adjustment was required, and if that adjustment or disclosure has not been made, what you will do?
Sir, we will first discuss with the management and we will ask them to include it in the financial statement and disclosures.
Let's say if management refuses to do it, let's
We
say
modify the opinion if it's material.
absolutely yes, because you are not issued the opinion yet. Modification you still have, you can still modify because this is the, your audit report is still in your hand. Are you understanding the point? So if management does not make an adjustment or disclosure, that means they have not complied with the financial reporting framework. And if financial reporting framework is not complied, simply you will modify the opinion. Correct? Pretty much straightforward. So we are pretty much clear with respect to the point number 1. Obtain sufficient and appropriate audit evidence for the event occurring between the date of financial statement and the date of auditor's report. Yes or no?
Yes, sir.
Okay, great. Now, the second event type, the second type of subsequent event, that is the facts. That's where we need to understand what we need to do. So tell me, the standard says, or your objective is to respond to the facts appropriately. How will you respond? And what is responding means? Respond to the fact. What is responding? Is it responding equal to performing audit procedures? My first question is responding equal to performing audit procedures?
No, sir.
No, sir. Auditor, there is no obligation to perform the audit procedure, sir, regarding those item fact known to him. But he has to respond appropriately.
Then what responding means?
Responding here, first we need to discuss with that management and those charged with the governance why it is not disclosed and why they are not shared to that auditor as well, because already they known to them, but the fact is identified by him no subsequently, but why they did not share with the auditor. Determine that subsequent event, that fact, whether we need to determine whether that needs the amendment. If the amendment required, then they can ask the management to amendment it.
Okay. Okay.
He will discuss the matter with the management as to why they did not disclose it. and whether it was intentional, purposely, they withheld the information, the facts, and they will consider the impact on the financial statements and whether they require any amendment.
Okay. Yes.
Then
So
if they require amendment, then they ask how will you proceed, how will you amend the financial statements.
yes.
Then there will be two situations, whether they amend or they do not amend. So
Okay.
accordingly, he will, since if they refuse to amend, then he and the audit report is issued, then auditor may take appropriate legal action like issuing a public notice, writing a letter to the authorities to prevent reliance on the audit report.
Yes. Absolutely. Absolutely correct. Yes. Very good. So you guys are correct. Absolutely. No doubt in that. Now the question comes is this fact. Let's say you identified this fact after the date of audit report. Okay. Now there could be two scenarios. In some cases, you have date of issuance of financial statement and uh, date after the issuance of financial statement. So I'll go to my timeline and divide this thing in two parts. Generally, you have some gap in between. In practical scenario, signing of audit report and issuance of financial statement takes time. Okay. So I will bifurcate into different categories. So let's say your audit report for this particular example was signed on 31st of July 25. This is signing. Sorry. 31st of July. And 31st of August was issuance. So AR sign and FS issue. Okay. So two different dates over here. Now the question comes is that okay, my audit report is signed, I have already issued, but the financial statement are not issued. You identified a fact. Remember, now you identified a fact, financial statements are not issued, audit report is issued. Your audit report is issued means your audit is complete. To validate that particular fact, how can you do you think the management will provide you the information? Is it part of your engagement letter? How will you validate that fact? Practical scenario, audit is done, dusted. You issued the audit report. Now, can you go back to management and ask management, tell me one thing, this I have this information in my hand. I need to corroborate this information with additional information from your side. Can you give me that? Do you think the management is going to provide you that information? Do you think yes or no?
Sorry, if they are intentionally not to say, if they are ready to provide the information, then definitely they should have been provided to auditor. But they did not provided it. But however, the auditor he came to know that the fact he identified it. There is some subsequent event. Then the audit report is signed already and given to them. Then definitely we will ask them to stop it, not to release to the stakeholders like the shareholders and the third party. We will prevent them.
Okay.
And if those items, if really needed to amend in the audit report, if that applicable financial reporting and regulation it's also allowing us to amend, then we can amend it. Amend, we can issue one more audit report, amended audit report.
But that the question goes is how can you identify that it requires an amendment or not? See, information you have received, but you need to validate that information somehow, and for that you need access to the records back. If management is not allowing you the access to the records, how will you validate that information?
Then we can take the legal advice on this. On that case, definitely we can give the modified opinion. If they are not able to provide it after getting the legal advice, also we are unable to provide the information, then we can go for the modified opinion.
Okay.
We cannot validate the information if the management refuses to give us the information.
So in that case, what you will do? Like one say, like we will seek the legal action. Apart from that,
A public notice can be
but without validation, how can you issue a public notice? What you will make?
yes,
What
that
will
is
include in
also.
a public notice?
Sir, here the thing is that we came to know that this fact is known, but it is a materiality is there. But the thing is that the auditor responsibility to get the sufficient and appropriate audit evidence for that, but he is missing. The management is providing the limitation on that.
See, limitation can come when you are pending with the report. Once you have issued the report, where is the limitation? You completed your audit report. How can you say it is a limitation?
So I mean the limitation is that the fact known to the auditor after issuing the audit report. But if not issued to the shareholder or stakeholder, we can ask them to stop it first.
Again, see, you need to validate the information in order to in order to say them, okay, it will amend the audit report or not. Let's say, for example, you have some information. Now that information is correct or not. For that, you need to go back to check the records. And then only you can say that no, no, this requires amendment to the audit report. Now, without validation, how can you say that this requires an amendment to the audit report and this is a subsequent event and management should stop circulation of this report? How can you say to that? And why management will give you? Your audit is done, your engagement is over. Why will management will provide you an access? Is there something in your engagement letter that allows you to do that?
Sir, written
No, sir.
representation we have taken, no?
Sir, we agreed the terms and condition in the SA 210 as well, and it is also mandated the SA 560, right? To check,
Okay.
it is bound to do that. The management responsibility to obey it. If otherwise, we are eligible to modify the report. When
Okay.
if it is material, see, anyway, that based on the auditor's significant judgment, based on his knowledge and expert and opinion, based on the discussion with the, if the management is not agreeing, ask them whether we can always go to the TGW. If both of
Okay.
them not giving, then we can take the legal advice. And accordingly, we can act accordingly. If it is a materiality, if this materiality we are unable to know, the reason is that we are not testing the evidence. The material possible effect you are unknown.
Okay. Uh, Absolutely correct. Now, I want to show you something with respect to management's responsibility. Okay. We will discuss something with respect to management responsibility. And this is something, we need to understand why they will tell us and why they are required to. Okay. Based on this only, we will able to understand what is the management responsibility basically with respect to the auditor's report. A minute. Let me open the report. Just it's taking a time. Just a minute. It's a heavy report. Yeah. See, now when we talk about a particular report, okay, we talk about management's responsibility. Okay. Now, when we talk about management's responsibility, we specify what are the management responsibility in our report itself. Responsibility of the management and board of directors for the standalone financial statement. And over there, if you see, if you go through these all the responsibilities, one way or down the line, you will find that it talks about that, okay, management is required to consider and provide you all the information. Again, okay, management is required to provide all the information to the auditors also. Like in our opinion also, we say that we have received all the information. If I show you this one, we have sought and obtained all the information and explanation. Yes or no? Now, that's why I say when I talk about a fact, it's an information related to the something that was already there. Something that was already there. This information was supposed to be provided by management. That's why we are issuing an opinion. And when I talk about fact is nothing but information which was not known earlier, but now provided. Now you are making, you are becoming aware about it. So now that information is provided to you, or you are getting to know about that information now. So that's why the first and foremost point is sought and obtained all the information. And where management is not providing that information related to your audit, you have all the rights to go back to the management and say that management, the first and foremost criteria was to get all the information. Now, if you are not giving me information, that means my opinion which was issued is not appropriate. Validation, not validation, secondary story. To validate whatever I think, I need all the information. That is the first part. And if you do not provide me that information, my opinion is not correct. I will change this point. I have not received all the information. The first and the foremost things change in your audit report. Okay. And everywhere, when you read your audit report, when you go through it, just don't pay attention to the name of the company. I'll show you something. Okay. In our opinion and best of our information and according to the explanation given to us, if something was kept hidden from us, if we are not able to validate, how can you say that you have been given explanations and informations? How can you say that? You cannot say that. So in that case, my opinion itself is a incorrect opinion. Opinion is not appropriate, and that gives me the right. That gives me the right to go to the management and say that management, you were supposed to provide me that information. Now provide me that information. It is part of the audit. Although the audit report has been issued, that is related to the audit or the facts, I think. If not related, then provide me the information and say it is not related. Are you understanding? That's why we are talking about the facts. That is the information. And for that, yeah, the rest of the procedure is same. Once you are aware about that information, go to the management, ask them why this information was not shared with us. Our first and foremost thing was that you will provide us all the information. That's what we are writing in our audit report. That okay, this information was provided, like we were supposed to be given all the information, and that is the most important point in your agreement engagement letter. Yes or no? Your engagement letter has the main important point: information, access to all the information. That's where everything flows. Like that's why I'm saying pay attention to the words facts. Why I'm saying? Because practically these challenges come, these questions comes, and that's how you understand through the core that okay, how and why we are required, and how management is responsible for giving us this information. Why management is responsible to give us this information. because it is all about information. We are writing in our opinion also. Clear?
Yes, sir. Clear, sir.
So rest everything you guys said correctly. Discuss with the management. Yes, we will discuss with the management. We will determine whether financial statement needs an amendment or not. And if so, then we will ask the management to, like, how do you address or how do you plan to address this? When I talk about respond appropriately, that means that first I will discuss with management or those charged with governance. Okay. Then whether this FS requires any amendment. And then if yes, then I will ask management, how do you plan to amend this or to deal in this situation?
Sir, if the audit report is already issued and management refused to cooperate with us, and we got information and management refused to cooperate with us, so then can we issue a new audit report with a disclaimer of opinion that management is not providing us the information,
See,
required
now the question
information?
comes is that can you issue another audit report when already a audit report is there in the circulation with your name? That's where the standards gives you a right, or even it says that if management does not take necessary steps or does not ensure that this report is not circulated, in that case you can do something which can seek prevent future reliance on that report. Auditor has a right to prevent future reliance on that particular report. You can issue or notify, or you can take necessary steps that, okay, this is how I will take steps. I will make sure that no one relies on my auditor's report, that auditor report that has been issued.
No, but sir, two aspects. Can he issue us another audit report, or can he? I mean,
See, issuing another audit report, it could be a one-sided action. For example, when you are issuing an audit report, where first you ask the management, change this. Management denied. No, I will not change. Now you are preventing, or you are taking necessary steps to prevent reliance on your audit report. Fine. Now, when it comes to issuance of a new audit report in place of that, it becomes tricky. It becomes challenging. Reason because at that point in time, whenever we talk about issuance of a report, before issuing the report, we have to comply with one specific standard, which is, can anyone tell me which is that? Like, if you want to issue an opinion, you have to do something before that.
Sir, we need to discuss with the management and those charged with governance.
Absolutely.
SA 260.
Absolutely. You need to discuss the draft opinion. You need to discuss with them. This is something I'm going to issue. This is how the report will be. And if there is a form and content which modifies the audit opinion, you need to discuss with them. SA 260. That's appropriately correct. Now, without discussing with them, without discussing the matter, can I issue one-sided report? That becomes a very challenging part. And
And-
that is,
have there been instances where a second report has been issued?
not really. I would say not really.
Oh,
Because it's a worst case scenario, and when any such things happen, that will like, for example, if you have already taken appropriate step to prevent the reliance on your report, that means you have circulated or you have given relevant information in the public that you should not rely. It's a very big matter already.
So the public notice may be best in these cases, stating
Yeah.
that please do not, management has not given us the specific explanation like that.
So that notice or steps already are demonstrating that there is something very issue going on, very big issue going on. So I have not seen any case till now where this kind of scenario has happened. Or in fact,
It's a rare scenario.
yeah, in fact, there are scenarios where, like, see, when you issue a audit report, like, there are scenarios where there are delays in issuing of audit report, or once such scenario happens, then the only option remains, most of the time forensic accounting engagements are taken, and investigations are taken. So if once such a scenario happens where there is a dispute going on between auditor and the management, steps have been taken, then for sure the next steps goes to the forensic accounting engagement or investigation.
So, sir, we can say that there is no as such legal bar on issuing a revised audit report, but generally that doesn't happen, right?
Not a legal bar. See, again, as I say, there are requirements before issuing the audit report. You need to communicate to the management. SA 260 says that you need to discuss with the management. If there is a form and content, there is a modification in the audit report which is changing the form and content of the audit report, you have to discuss with them. Okay, these are the circumstances that are affecting the form and content of the audit report. Second, when I talk about communication with the management, it has to be two-way communication. Now, if you are not able to do a two-way communication, if you are not able to discuss with them appropriately, if you are not able to come to a conclusion, you directly cannot issue one-sided report.
If there is something suspicious, then we can also communicate to regulatory authorities about
Yes,
it.
there are options available. In that case, if you suspect a fraud, so you have 143, section 143.12 to report. Okay. If there are other ways also, but again, I would not say issuing one-sided audit report is an option.
Yes, sir. Then the management refuse not to amend or not to do anything on that. Definitely, it is integrity issue. Then definitely auditor take the legal advice. They can go for withdrawal if it is permitted by the law.
Okay. So once you, like, we will proceed with that. Once you decide, like, once you ask management how to address, management rectifies, you perform the procedure. Okay, if management is ready to amend the financial statement, perform the procedure, check whether it is appropriate in line with that or not, and then either you can issue new audit report, or you can amend your previous audit report. That is known as a dual dating, basically. That is when auditor amends the report to include an additional date restricted to the date of the amendment. Okay, and what happens in that particular scenario is you specify that, okay, this is a date, additional date mentioned in the new audit report, and from this date to particular this date, this is the only event which has been further audited, and what is your opinion on that? So either you do a dual dating, or you issue a new audit report. If you issue a new audit report, still you specify that, okay, from this was the original date of report, and from this date to this date we have only verified this event. Clear?
Yes, sir.
And if management still does not agree, we have discussed in that okay, in that case you have appropriate appropriate right to take action to prevent reliance on the audit report. So
Suppose management accepts to amend the financial statements and inspire means sorry sir, I am audible. Am I audible?
yes, you are audible.
Suppose management is ready to amend the financial statement and also wants to, that is not related to that subsequent event, but also wants to change an estimate. So management can do so.
So management suo moto want to change the financial statements.
No, in addition to that subsequent event, management also want to change an estimate, a previous
Now,
estimate which was on which auditor do not have any objection, but as the management is amending the financial statement, so they thought that they should also amend an estimate along with the subsequent event or the fact that has been recognized by the auditor after the date of issue of audit report. So,
see, usually not something you should allow it. Reason because now you are changing the financial statement based on the hindsight. Okay, the information. See, what you can change is the information which was known if earlier to you. If you have the outcome of the estimate later on when you are amending the financial statement, you need to always consider whether this information was available on 31st of March, that is the closure of the financial statement, whether this information was available before the date of signing of audit report. If yes, then if it is material, it could become a subsequent event for you. But if it is not material, then I don't think so. You should, allow management to change those things.
means it is there, yes, it is available at the balance sheet date, but at balance sheet date there are two alternatives. Management firstly followed the second alternative, but as the management is amending the financial statement, now management decided to follow the second alternative. First
No,
alternative. Management
no.
decided to
Usually,
follow the first alternative.
no, in the new audit report, usually you will not allow that particular kind of thing. Reason because when we issue a new audit report, what we have to do, we have to audit only the portion to which the subsequent event is related to. We are not going to audit the other things other than the subsequent event. If there is an amendment related to the subsequent event, yes, you audit and you provide your opinion on that. But if management, let's say, changes the estimate, like selects a second option, that is something, are you going to audit that after the date of audit report? Again, where there is no subsequent event. Answer is you are not allowed to. Otherwise, what would have happened is, in the name of subsequent event, I would have changed my entire financials. Because in financials, there are multiple estimates.
But the management has changed.
You cannot sign because you only have performed procedures on subsequent event. How can you issue an audit report on the financials where you have not performed the audit procedures? And you cannot sign in that financial. You have to ask management remove this change, otherwise we will not be able to sign.
So, sir, this would mean a complete new audit.
Yeah, like I can change any number in that for that scenario. Tomorrow, if I allow management to change one estimate, they can change anything. My profit will go from here to there. Doesn't make any sense. Am I clear? Like any further doubts?
No, sir.
So basically, you
Sir,
shouldn't be signing. Yeah.
I just need a few examples where we should do the dual dating and where the new audit report is being issued.
Both
Like,
options
what
are
are
available.
the circumstances, how to choose between them?
See, both options are available to you. It's not something is there are scenarios where you should choose one compared to other. It's not the case. It's up to you. You are free to decide whether you want to amend the auditor's report or whether you want to provide a new auditor's report. See, now the only part I would say practically that creates which one to go is the impact of the subsequent event. Is there a major impact of the subsequent event on your entire audit report? See, when I can amend the audit report is when there are few changes to it, and when I can issue a new audit report is when you know old audit report doesn't make a sense. I have to entirely change it, or I have to change a major portion. So at that point in time, you may decide whether go for a dual dating, or you may go for a kind of a scenario where you want to issue a new audit report that includes a statement of emphasis of matter paragraph or other matter paragraph.
Okay, sir. Okay, got it.
Clear? Any doubt?
No, sir, clear.
Anyone with respect to any of the doubt? So what we need to do when I say respond appropriately?
Sir, is there any response? See, that the audit report and financial statement both are released to the shareholders. After that, which means it's published and circulated to them as well, the shareholders and third party, wherever as the case may be. After that, issuing the report, the things, the auditor came to know that there's some fact to be updated in the financial statement. In those cases, what is the standard saying, sir?
Outdated as in
Sir?
outdated. Can you explain
Updated.
the term? Yeah,
He means updated.
updated.
I,
Oh,
I,
it is okay.
no. I mean that not updated. The audit report is prepared and issued, and the financial statement also is approved by the board of directors, and they issued the audit report also signed, and it's circulated to the shareholders. It's released. After releasing the report and the financial statement, the auditor came to know that some fact which need the amendment. In those cases, what the standard saying? That's what I am wanted to say. Understand?
See, in that case, the standard says simply if that fact known to you earlier on the date of audit report or before that, if that required the amendment, then go and perform the procedures. Respond appropriately, that means. And what is a respond appropriately? Ask management and discuss with management about that fact. Determine if this requires any amendment in the financial statement or audit report. If this requires an amendment to the financial statement, okay, in that case, ask management like how you are going to do it, because you have already circulated the financial statements. If this requires an amendment to the audit report, then in that case, see, audit report is already circulated. Now, the only thing is that can management, you know, circulate your new audit report and stop circulating old audit report? So whatsoever they have circulated, stop it. Do not circulate further. Okay. And now, if management is ready to, allowing you to issue new audit report, then in that case, is management ready to give you a commitment that okay, I will circulate this new audit report to all the stakeholders to whom I already shared your old audit report? If management is ready to give you that commitment, if management is ready to share that okay, anyone who was in receipt of previously issued financial statement together with audit report is informed about okay, there is new report coming, and then new report is issued and they receive the new report, fine. If not, take legal action, appropriate steps. So there is one question that it seems that we are more providing opinion based on we have.
Sir, that was based on earlier
Okay.
content, so you
Okay.
can ignore it. Yeah.
Thank you. So there is another question. What do we mean by dual dating? Does it mean that in the same audit report we provide opinion on the earlier audit of FS and further facts known after the FS? Yes, dual dating means usually your audit report has one date. Okay, one particular date when it is issued. If I include another date in that audit report, and if I include that okay, this is from this particular date to this particular date, only this fact has been audited. Okay, if I add that is a kind of, two dates which I'm mentioning in your audit report and saying that okay, from this to this date, this is the only thing which I have audited further. So for example, if I show you see, you have this some dates in your audit report. Okay, if I add one more date, something, let's say 30th June 2025, example, not real, just an example. Okay, and if I add this particular part, okay, like this additional, and if I add this, that okay, from this particular date to this particular date, this is the note which we have audited in the financial statement, this is the information we have audited in the financial statement. That is dual dating. I'm prescribing two different dates.
Sir, is there any ICAI format for dual dating?
ICAI format as such means
Like we have
And
some
for
formats
the form.
prescribed by ICAI.
standard. Basically, standard has the example in it. So if I'm not wrong, there is a para A13 in the standard itself, which provides a format of note that what you are required to include in that. So when I talk about SA 560, if you refer to application material, it has the example.
Okay, sir. I'll read that.
Any other doubt, any other questions? So let's quickly go through the study material. Okay. Subsequent events. Now, objective of the auditor, basically it's the same. Respond appropriately to the facts and obtain sufficient and appropriate audit evidence about the events that are occurring from the date of financial statement and the date of audit report. So first, events occurring between the date of financial statement and the date of audit report. These are the events we are talking about, term events. And as I said, you need to perform procedures to get the information on this event, sufficient and appropriate audit evidence. Then only you can say whether the adjustment or disclosure is appropriate or not. But when you talk about facts, these are two facts. Now, one is after the date of report, but before FS is issued. Second is after FS has been issued. Generally, if you see, there are very less changes between both of them. The only benefit you have over here is this one, that financial statements are not yet issued. So you can ask management, stop, do not issue. Okay. You can only do it that, okay, you can ask management, stop, do not issue this financial statement. And you can still ask management to amend the financial statement and then issue the modified version. But when I'm talking about this one, financial statement have been issued, things gone, matter closed. Okay. Now you need to make sure that management has taken steps to inform about the situation everyone in receipt of the previous financial statement. That means management is giving you commitment. Okay, now what I'll do is I am going to inform everyone to whom the earlier financial statements were issued that these are the new financial statement and this is a new opinion. You should not rely to the old opinion. That is the only difference between these two scenarios. Clear? And rest everything same that we discussed.
Yes, sir.
Any doubt with respect to subsequent events? No? Okay.
No, sir.
Okay. If no doubts, let's take a quick 10-minute break. After the break, we will take up some questions on this topic to understand further and how to write the answers. Let's take a quick 10-minute break. Thank you. Let's continue the session, guys. So we discussed about SA 560. Okay, we discussed on what to do when you identify subsequent event. Let's take one good question on SA 550 and 560 together. So now we will be discussing one question, and then we will be able to understand how to answer a question in the exam. Okay. So the question is, you are the senior auditor, auditing supervisor responsible for auditing Zenith Electronics Limited, a manufacturer of high-end audio equipment. Zenith's year end is March 31st, 2024, and you are currently finalizing the audit with an expected sign-off date of 15th May 2024. During the audit, you identified a significant related party transaction. Zenith sold a batch of discontinued speaker to Audiophile Heaven Incorporation on February 28, 2024. Audiophile is owned by the brother-in-law of Zenith CEO, making it a related party as per India's 24. The transaction was material, that is 20% of the annual sales, and your audit procedures confirmed the following. Valuation. The speakers were valued as sold at a price that appears to be in line with the purchase cost, plus a markup as charged in the case of other customers. Disclosure. The transaction was appropriately disclosed in the notes to financial statements as a related party transaction. On 10th May 2024, while reviewing the management representation letter, you notice a passing mention of a product return from Audiophile. Upon inquiry, management informs you that the Audiophile returned the entire batch of the speaker on 15th April 2024 due to an unexpected quality issues. Management assures that this return will accounted for in the next financial year, that no further disclosures is necessary in the current financial statement. They argue that the initial sale was bona fide and the return is a separate event that occurred after the year end. You have not performed any further audit procedure regarding this return, as you believe your initial procedures on the sales was satisfactory. You are now considering signing off on the audit report. Evaluate the management assertions that the return good does not require adjustment in the disclosure in the current financial statement. Now, take a minute, read the question again, and then try to answer. So, I'll just zoom in a bit for you guys. Now, read the question, take a minute, and then try to answer. Come on, guys. So, what do you think? How will you deal with this particular situation? How will you deal with this particular situation? First of all, you need to evaluate the management's assertion that the return of the goods does not require adjustment or the disclosure in the current period financial statement.
This is
Sir,
wrong.
as the quality issues are unexpected, so management cannot there is no need to reverse the revenue for the financial year under the audit.
Okay, so do you agree with the management that it does not require any adjustment?
Yes, sir.
Okay.
Because the quality issues are unexpected.
Absolutely correct. Okay, fine, great. Anyone else with some different answer?
No, so we will verify whether there were really any quality issues or whether this is an offshoot of the related party transactions and the earlier part was intended to inflate the profits or not. We will perform the procedures and verify the transactions, and so we will not rely on the management assertion that this does not require any further disclosure or adjustment. We will do our own procedures for that.
Okay. Anyone else with something different? Any else other things to add? No?
Sir, this is a purely the related party transaction as per the Ind AS 24, since the transaction is exceeding 20% of the total annual sales. In SEBI, I don't know whether it is a limited company or not, the listed company.
Let's assume it's not a listed entity as of now. To keep the complexity down, yeah.
Okay. If then see, I didn't see. Okay, if it is a listed company, the procedure is different. Even 10% and above also there is it's tantamount to related body transaction. And if any 1,000 crore or more also that just shareholder approval is needed from the general meeting. That is a different story. But in this case, since it is not a listed company, as per the Ind AS, they identified the transaction as a related party. That related party discloses is needed as per the Ind AS. That is true. They disclosed it, but it is returned on subsequently. But they disclosed appropriately since it is a material event. And I don't know what is the turnover of it, the company, if it is more than 250 crores. And sometimes that the public, the voluntary, they can put in a key auditor matter also disclosure if needed. That was paid, but whatever they have done is correct only.
Okay. So you are saying management is correct.
But it is the disclosure need to be done. This is what written subsequently.
Okay. Disclosure is required to be done. Okay.
Yeah.
Okay, fine. Anyone else with some different answer or example or something more to add over to this? Anyone? Nope. Okay. I will give you an answer in a minute for this one. Okay, not an issue. But the second question is, if you say this requires the disclosure, this does not require the adjustment. Okay. So you need to analyze the event or the fact in light of SA 560 and 550. So let's say this is the scenario now. If you say disclosure, what impact it will have, okay, like on your related party requirements, or if you say it's an adjustment, again, how it will impact the related party transactions or the assessment you have already done. Because it is a combination, it's a related party.
Sir, since it is given the disclosure, the evaluation that the speaker were sold, that price appeared in line with the purchase cost plus markup charged to the case with the other customer, which means there is an uncontrolled party. The price are in line. The transaction is fine because this is dealt with the other than the what do you call related party. that arm's length price is confirmed. There is no doubt at all. But disclosure alone is required. The disclosure also they given. I don't find any fault on that SA 550, the related party disclosures. And subsequent event also, they have to give the disclosures.
Okay.
That would be fine. The modification is not needed from the audit side. That's what I'm going to
Modification
say.
is not required. Anyone else with something further to add or some different example here or different answer over here? Anyone else? What would be the impact on my related party regarding risk? See, understand one thing. Now I'll explain you. Here, first of all, we need to apply the relevant financial reporting framework to determine whether this is an adjusting event or an non-adjusting event. So which is the, let's say this is a limited entity, Ind AS is applicable. So which is the Ind AS that you will apply to identify whether this is an adjusting event or a non-adjusting event? What is the, yeah. Anyone? So what is the financial reporting framework over here, guys? Basic, standard. What is the financial reporting framework that you will apply in this scenario? Because I said for the related party, Ind AS 24 is applicable. So as you now, you can see that, okay, Ind AS is applicable. So which Ind AS you will first of all apply?
Sir, India extends even after the reporting period.
Absolutely correct. Ind AS 10. Now, based on the Ind AS 10, you need to determine whether this is an adjusting event or a non-adjusting event. Okay. So now this, whether this is an adjusting event or a non-adjusting event depends upon one important fact. Zenith sold a batch of discontinued speaker to audiophile. This part, discontinued speaker. And because of the unexpected quality issues, it was returned back. Fine. Now, here, this raises a question. Why discontinued speaker was sold? That too at a 10% markup. They were discontinued. They were still sold at a 10% markup, which are sold to another customers. This could be a transaction. There is a risk because first of all, you need to understand why they were discontinued. Is there any fraud risk? Because related party transaction, there could be a chance of fraud risk. Remember? And this is the revenue recognition. Revenue recognition, already you have a high risk area. Yes or no? SA 240, remember? So if I talk about SA 240, that is revenue recognition, I already have a presumed risk of fraud in revenue recognition. The same scenario is over here. Second, it's a related party. Third, I have sold a discontinued speaker. Fourth, that too at markup. And fifth, again, I have unexpected quality issues and an entire batch has been returned back to me. The transaction was 20% of annual sales. That is a material amount, huge material. And 20% of annual sales is a very big material amount. Yes or no? Now the question comes is that whether this increases your fraud risk or not. I'm not saying there is a fraud. No, I'm not commenting that there is an actual fraud, but I'm talking about these are the fraud risk factors. Management override of control, because management was able to sell the discontinued speaker. They returned back immediately after the start of April. So there are chances there is a fraud in the revenue recognition, and that increase your risk of fraud to a higher level. Yes or no?
Yes, sir. Actually,
Yes, sir, there is.
the discontinued where I did not notice it actually. The discontinued, which means they are trying to window dressing actually. In this case, the condition and even existed before to the financial reporting date, which means it is a adjusting event.
Absolutely. So now the conditions are already existing. Okay. And if you apply your Ind AS 10, it says that specifies that how to recognize an adjusting event. Okay. It talks about that. Okay. If you have the evidence of the condition that existed at the end of reporting period, in that case, yes, you should adjust for it. So you need to apply your professional judgment over here to say that it is an adjusting event because it was a discontinued speaker. And if the reason was, for example, let's say if the reason for the discontinued was unexpected quality issues or the quality issues because of which they were discontinued, then 100% sure it's an adjusting event because the evidence was already available. The conditions were already present.
Yes, sir. Actually, they known the fact exactly the prayer before the selling also. It's a discontinued operation. So they are trying to boost up the sales revenue.
Absolutely correct. Now, that is a scenario where your risk of fraud will come into the picture. So, what we discussed when you identify a risk of fraud with respect to a related party transaction?
Yes, sir. Related party transaction, the fraud risk factor is high, and management override control also is there applicable on these cases. Then question of
There is a risk of transaction being bogus to inflate the sales.
Yes, yes. But remember, when we were discussing about related party transaction, at that point in time, we discussed one thing specifically. Okay, that if you identify, like it was with respect to the undisclosed, but at that point in time, we understood that we have to maintain alertness for the related party information when reviewing records and documents. At that point in time, we understood that okay, you need to make sure that okay, everything whatever it is there, it is as the arm's length price or not, and whether it is to mislead the financial statement. Remember, misleading the financial statement, something which is causing you not achieving the true and fair presentation, causing the financial statement to be misleading. And if that is the case, then in that case, you have to perform additional procedures to confirm it. Yes or no? In SA 550.
yes, sir.
If the
Discuss.
effects of the related party relationships of the transaction is causing the financial statement to be misleading, in that particular case, either you have to modify your opinion or you have to ask the management to rectify it. So this may become a ground of the modification if management does not rectify, because this can be misleading. And this is misleading because this sale has actually reversed. There is no markup in the next few days itself. This is totally reversed. Okay, this has been reversed. So now 20% of your sale has gone down. This is becoming misleading as per SA 550.
Yes, sir. If the word that discontinued is not there, then the issues will be different.
Yeah. And as a result, I cannot accept management's contention that okay, this is something will not require an adjustment. Sorry, it will require an adjustment. It is as per SA 550 plus SA 560 that we understood. Clear?
Yes, sir.
This is how you need to answer the question. Like, you need to go through the particular question and understand what is the scenario, what you are required to, then write upon that particular part. So if I just quickly show you answer, like again, draft answer. That could have been, you can have, something similar on that. So first specify what is the subsequent event, specify the related party transaction, like emphasize on the that higher risk of material misstatement or manipulation, you need to specify that. And then conclusion, you need to provide the conclusion based on that. Management assertions is not acceptable at the face value, sorry, you cannot, because the related party transaction and the subsequent events both are of such nature that we cannot accept management's assertion. Clear? Any doubt?
Yes, sir. Clear, sir.
Okay. We'll take one more question on a simpler side. Like it's, I would say it's a bit easy compared to the first one. Okay. So let's go through that question. CA Samir is the engagement partner of Audit Nexus Innovations Limited for the financial year ended 31st March 2025. The audit was completed and CA Samir signed the audit report on August 22, 2025. The financial statements are scheduled to be issued to the shareholders on 5th September 2025, along with the notice of annual general meeting. Now, during the audit and the subsequent period, the following two material events came to the light. Number one, on August 15, a major lawsuit against the company, which was pending and disclosed as a contingent liability as at 31st March 2025, was settled in the court. The court ordered Nexus Innovations to pay a final settlement of 10 crores. The management argued that since the judgment was passed after the balance sheet date, they would only enhance the disclosure in the notes to accounts and not make a provision for the liability. Number two, on August 28, 2025, that is after signing the audit report, CSME learned from a public announcement that Nexus Innovation has agreed to acquire a major competitor. This business combination is highly significant to the company's future operation, but was not under negotiation at the balance sheet date. The management believes since the audit report has already been signed, no action is required regarding the financial statement for a year ended 31st March 2025. As the engagement partner, you are required to analyze both situations in accordance with SA 560 and advise the appropriate accounting treatment and your responsibility as an auditor in each of the case. Take a minute, read the question again, and then try to answer.
Sir, in case of event 1, we are required to make the adjustment as there is a further evidence of the condition existing at the balance sheet date. And in case of event 2, there is no requirement of adjustment as the negotiation was not in place at the balance sheet date. The negotiation started after the balance sheet date and there is no condition at the balance sheet date.
Okay. Anyone else with a different answer?
But on the event number one, they already disclosed it's a contingent liability. That time is correct only that matter. But subsequently, before signing the audit report, it is exactly the subsequent event. The court also ordered that 10 crore. It has to. It is a adjusting event. It has to be adjusted in the financial statement and disclosed as appropriately.
So, is it something you are saying? So already disclosure is there. Now the question comes is that what else is required over here?
Else required means that it has to be adjusted in the financial statement itself. Financial statement, it's need amendments.
Amendment says in like what kind of amendment? Can you just specify some bit?
It's exactly liability, no, it has to pay. It's a contingent liability means it's a disclosure. Now it's a form part of the liability.
So you
Instead
are
of,
saying there should be a provision for that.
yes,
Okay, provision. So disclosure is not sufficient. There should be a provision.
correct, exactly.
And in second case,
Second case, yeah, I will let them other to answer. I will go through a second. Yeah.
anyone else with some different answer or something further to add? Anyone? We will assume that NDS is applicable in this scenario.
Sir, on the second case, the NDS is not applicable. Actually, any event or occurrence, we should be there and it should be present as on the balance sheet date. But this discussion was not happened on or before that financial date, which means 31st March 2025. This is not a adjusting event, first of all,
Okay.
straight away, as per the NDS 10.
Okay.
but disclosure can be done. Why? Because this is one of the major item, major competitor under the public announcement. But I am thinking about that line only. But my first part is that it is not a non-adjusting event.
If it is a non-adjusting event, then do you think a disclosure will be required? No information, no condition was existing on the date of the audit financial statement. Do you think this requires a disclosure also? Like there was nothing as on date of 31st March. So in this particular transaction, if I talk about in second transaction, no.
Sir, no, disclosure is not required, sir. When there is a non-adjusting event, disclosure is not required.
Okay, no condition on.
No condition, no condition present. The
On 31st March.
Yeah, 31st March.
Yeah. So no condition present on 31st March. Everything has happened after the year end, after the signing of audit report. After the signing of audit report.
Yes, sir. Even this is after signing the audit report.
Anyone else with something different answer over here or something further to add? So why not if I say this conditions were not present, will it not be a non-adjusting event?
Yes, sir. Condition not present means which is a non-adjusting event only.
And non-adjusting event, don't you think requires a disclosure? Non-adjusting events requires a disclosure, and adjusting events requires an adjustment. So why not disclosure? Why no disclosures is required?
I'm also thinking in that line. Disclosure is needed. I believe so. Means adjustment.
This is
Sir,
for
this
only
is
public announcement only. It's only public announcement. There is no decision is taken for this.
Okay. Okay. I'll tell you the answer. Now see, when I talk about event number one, it's pretty much straightforward. Everything is fine. Adjusting requires an adjustment. Ask management to amend the it's before the signing of audit report. Ask management to pass the adjustment. Otherwise, we'll modify the opinion. Straightforward. No difficulty over there. Okay. Now coming to the event number 2. That's where the complexity starts. Now, if I say it's a non-adjusting event, non-adjusting events requires the disclosure in the financial statement. But if this is after signing of the audit report, okay, see, the financial statements are scheduled to be issued to the shareholder on September 5, 2025. So the financial statements are yet to be issued because on August 28, I identified this. So this is after signing of the audit report, but before issuance of the financial statement. Okay, this is between that period that you have signed the audit report, but still, this is not issued to the public at large. Okay. Now, what you are required to do for this? Remember, the auditor's responsibility here is only related to the facts which are become known to the auditor after the date of audit report. Okay. If they would have known earlier to him, it would have required him to amend the report. So, if a fact become known to the auditor that it had been known to the auditor at the time of the audit report, may have caused the auditor to amend the auditor's report. In that case only, you will proceed ahead and you will discuss with the management. Okay, management, tell me what you want to do in this scenario, how we are required to amend the financial statement, what steps you will take, what is the impact on the audit report. Okay, so that point in time you will understand that how it is going to impact your audit report. If it is something, if would have known earlier and would have caused you amend the audit report. Now tell me, in this scenario, if this was known earlier, let's say on the date of audit report, would there be any impact?
Sir, here before the audit report, after the audit report, but it's not issued to the shareholders, but they are eligible to amend that report. They can issue the disclosures. If the management is failed to disclose, then the action will be different.
No, but tell me one thing. Do you think this would have caused, if known earlier, this would have caused the auditor to amend the report?
Yes, definitely he will ask the management to first incorporate in the financial report the disclosures. If they are not able to disclose, then based on that he can take a call, whether it is to amend or take the legal advice or qualify opinion. Like that, he can choose accordingly. Even after issuing the report also, again that they can ask them to stop the report. They can modify the report, audit report.
That's where your knowledge of Ind AS will help you out. See, your answer to an extent is really correct, but there is a small thing that we are still to understand over here, is about financial reporting framework. That's why I said Ind AS is applicable. Now, as per Ind AS 10, okay, as per Ind AS 10, subsequent events are from the date of financial statement, okay, till the end of your from the end of the reporting period, that is 31st March. So it is from the 31st March to approved by the financial statements are approved by the board of directors. FS approved by board. Those are the subsequent events. Okay, as per your financial reporting framework, the subsequent events are till the time financial statements are approved by the board of directors in case of a company, or in case of any entity, then by appropriate authority. So if CS Samir has signed on 22nd August, you have like if you see the chronology in the company also, how it happens. First, the financial statements are approved by the board, then the auditor issues the audit report on that. Okay, this is how it works. Like first you have a signing of financial statements or approval of the financial statement by the board. Then you have the audit report issuance by the auditor. And then it goes to the AGM and approved by the shareholder. Okay, this is how the flow works usually. Now in this scenario, this is not even event 2. It is happening after the signing of audit report. Once they are already approved by the board, it is no longer a subsequent event. Understand one thing, it is no longer a subsequent event as per your financial reporting framework. It does not require any changes to the financial statement. If it does not require any change to the financial statement, and this fact, if like it is not related something which requires a disclosure, not a subsequent event as per my framework, then why should I ask management to amend?
Sir, the thing is that here they are asking the question, as per the engagement partner, you are required to analyze the both situation in accordance with the SA 560. They are not asking us to evaluate as per the accounting framework.
See, any which ways, what is the existing, non-existing event or subsequent event? You have to apply financial reporting framework for that. You need to understand that whether this requires an adjustment or disclosure. Remember, the adjustment and disclosure is not something coming from your SA 560. It is coming from your financial reporting framework. The financial reporting framework decides whether this requires an adjustment or this requires a disclosure or nothing. So it's not like that either adjustment or disclosure. It is adjustment, disclosure, or nothing. In that case, you need to understand whether this requires a disclosure or not, whether even it's a subsequent event. Now, let's say, for example, instead of this 28th August, what if it is 31st March 2026? Will you still call a subsequent event? Answer is no. Will you still require a disclosure in the already issued financial statement? Answer is no. Because your financial reporting framework doesn't require you to. In that case, if something is not even a subsequent event, it will not require any adjustment. So that, in this particular scenario, management believes that the financial statements are already signed. No action is required in the financial statement, and that is correct.
Sir,
That is correct.
okay, say I agree with that. The Ind AS 10 is talk about different. As per the applicable financial reporting framework, is a subsequent event is defined. That event is defined between the financial after the financial reporting period, then before signing of the board report, the board of directors approved. But here that the SA 560 is a different opinion. See, SA 560 is talk about up to that auditor the audit report. See, here, see, which one we need to follow? Here the conflict is there.
Okay. Tell me what SA 560 says for the event after the audit report signed.
After the audit report also, before releasing, if the fact came to know that the auditor, if it is which caused the amendment of the audit report, he is eligible to amend the audit report.
Okay, let us go back and go through the standard again once more. Okay, for further understanding, let's understand the standard. See, now here, what it says, the auditor has no obligation to perform any procedures regarding the financial statement after the date of auditor report. However, when after the date of audit report, but before the date of financial statements are issued, a fact become known to the auditor that it had been known at the date of auditor's report may have caused auditor to amend the report. Now, why will you amend the report in this scenario? Tell me, if this was known earlier to you, why would I cause you to amend the report?
Because the fact is known to him, right? In this case, on the second case.
The fact which requires you to amend the report. It's not only the fact. Now, a fact can require you to amend the report when something was not done appropriately, you came to know later on.
So, okay, which means that the event after having a discussion and conclusion is says that the amendment is not needed. You are trying to say that?
Yeah. So after having discussion with the management, you decide this is as per the financial reporting framework, no amendment is required in this case to the financial statement, means there is no amendment to your auditor's report, even if known earlier. What difference it will make?
But
Like
sir,
it's offensive. Yeah.
a disclosure in board's report may be required. Board's report for
See, that
that
is something
non-existing
different.
event.
That is a different topic altogether, disclosure in the board's report. Because again, if you see, we have to interpret the section of the Companies Act for that.
Yes, sir.
So altogether, that's a different topic of the discussion. Because again, there are few things in that section I'm not able. I would not like to go into that particular domain, section 132. But again, as I'm saying, always see what your financial reporting framework requires you to do.
Sir, here I have two questions. First, basically that even the fact came to know whether it is a significant or non-significant. After the discussion only we can came to know that. But see, here the question is simple. There is may have caused the auditor to amend the audit report. That is fine only. But we can give the two options. If it is that caused to amend the audit report, then that is a procedure. If not caused to amend the report, then we can leave it. Like that, the both answer can we give that, or we can assume that.
Okay. Okay. Uh, I'll also provide you one more area. See what he's saying that when you identify an event over here, discuss with the management. Okay, discuss the matter. No doubt. Determine whether financial statement needs amendment. Determine. It's not necessary that they will need amendment. Determine if they need amendment. And you need to proceed. If management amends the financial statement, and if so, that means if requires the amendment, then only rest of the things will follow. Otherwise, why you need to change or do anything else? So the question comes is, if it requires amendment by way of a disclosure or by way of anything, then only you will proceed ahead and perform additional procedures. Otherwise, why will you do procedures? Why will you issue a new audit report when there is no amendment required in your financial statement? So the point is, discussion will happen with the management to understand whether it is a adjusting, non-adjusting subsequent event or whether any financial reporting framework requires you to amend it. So you need to determine this. And if there is not required, if that is not required, step number 3, that is inquire how the management intend to address, will never come into picture. Am I clear to you? Like, and is there any further doubt on this?
Sir, can we give the option to the management? Say we are enquiring is okay. Enquiring how the management intend to address the matter with the financial statement. If they are saying that okay, no need, can we do it so? Can we not comment?
See, it's not only management to determine whether the financial statement needs amendment. This is not decided by the management. This part is decided by your applicable financial reporting framework. In our case, we are referring to Ind AS 10. So determination whether your financial statement needs amendment is decided by applicable financial reporting framework. And once you decide this needs amendment, now go with the management. Management, tell me how you are planning to address this matter.
Okay, so I think I now I got it. I will from the after that financial reporting period till the board of directors approved. That fact the auditor came to know that later after signing the audit report. Is that right? Understand my understanding is correct, sir?
See, yes, now your understanding is correct. In our example, it is not a subsequent event as per the financial reporting framework because it is something happening after the financial statements are approved by the board of directors. and no conditions and anything was there on the date of financial statement. Let's say if negotiations were going on, some draft agreements were already exchanged, term sheet were finalized. If some evidence was available, I would have said no, this is an adjusting event or something similar to that. Or even if a term sheet was signed after the reporting period but before approval of the financial statement. Let's say financial statement got approved on the date of signing. So this is the signing date 22nd August. Let's say if this particular deal was signed on before 22nd August, let's say 21st August, this would have been non-adjusting event as per my financial reporting framework. Requires a disclosure, make the disclosure. If not, then I will either prevent manage. I will then rest of the things will follow as an auditor. But just because it is after 22nd of August, it is not a subsequent event, neither an adjusting event nor a non-adjusting event. This doesn't require an amendment to the financial statement, either by way of a disclosure or adjustment. No further things are required.
Okay, sir. Then I have one question, sir. Actually, that as per the Ind AS 10, that is event occur approach the balance sheet, it talks about before approval of the board of directors. Here in here the 560 it talks about that before signing the audit report. See, which one is the prevail?
Again, you are comparing wrong things. Now, what
Okay.
it says, your standard on auditing talks about when to take action. Like it classifies the event based on two categories, like before signing of audit report, after signing of audit report, and then to take action on that. That's why we are not using the term event after signing the audit report. And that was the purpose when I discussed about, I'm talking about the facts. You need to go to on that, because a lot of students get confused. Should we go on the Ind AS or should we go on standard? But both are different. They are not contradictory. They are not overlapping. One is talking about purely events. Second is talking about your facts that would have caused to amend the audit report. Again, that's why I said it's not an event. I'm talking about facts, information which was already there, but you were not aware about it. And
Okay,
that
sir.
extends beyond the date.
Okay, sir. One thing, please put the timeline as per the Ind AS, as per the SA 560. Please explain what is the before that subsequent event. What is the fact?
See, that will create
That
more
is-
trouble. That will create more trouble. Trust me. Why? I'll tell you. Because your financial reporting framework talks about subsequent event. Okay. That requires adjustment or disclosure. It does not talk about anything beyond the date of approval of financial statement. When I talk about standard, it says that if it is an adjusting event or non-adjusting event, it is still the date of approval by the board of directors or whatever date it is. But beyond that, go further, go a step ahead and think of a fact, or check about the fact if that have caused you the amend financial statement. So your auditing standard takes a step ahead, goes further and covers the fact area which is not there in your financial reporting framework, because it is not on the auditing. If I simply tell you in the form of timeline, again, see, it may confuse a lot of students, but I'll tell you simply, here till here, this point, your financial reporting framework ends. This is a place where financial reporting framework ends. AR signed, financials approved, matter over. Financial reporting framework ends here. It does not go beyond that. But beyond that, we are only talking about facts, which is covered by your standard. I'm not talking about events. Events are till here because your financial reporting framework ends here. That's why we are using the term facts. which would have caused you amend the audit report. This is additional part which is there in your SA 560 because it is related to audit, and that's why I discussed in the start. I'm talking about the information which was already available but not known to you. It is not something which is came new and generating new after the period or after these dates. No, I'm talking about facts, information already available but not known to you.
Okay, so it's very clear that the 31st July is that prior to that is a event. That is a subsequent event. It's very clear. Beyond that is a fact known to that. Okay, it's very clear as per the SC 560. Please give the information about Ind AS 10. What it's talking about.
Ind AS 10 talks about that. Okay, it talks about the events occurring between the end of reporting period and the date when the financial statements are approved by the board of directors. That's where your financial reporting framework ends. I'm talking with respect to the Ind AS 10 only.
Okay, Ind AS 10 also sometime that audit report, that board of approval, both will
It
happen
will
on the
not,
same day.
because it's a financial reporting framework. It will not talk about audit report. It is reporting framework. It will talk only about financial statements.
Sir, give that Ind AS in the timeline, sir.
So FRF and your is your Ind AS 10. I'm talking about that only. This is Ind AS 10. Is it clear? Any doubt?
No,
See,
sir.
yeah.
Clear.
Yeah. What I will suggest, if you still have a doubt, what I suggest is go back and read the standard. That's where the reading is required. That will enhance your understanding. So read the standard, read Ind AS, and then see. You will come to know what is the difference between both of them, and they are not contradictory. Trust me.
Sir, how we incorporate this two, Indias and audit in the answers?
In that case, see, again, when it is a question, like that question that I've drafted was purposefully drafted in a way to discuss this particular scenario and to give you an understanding of these. But when it comes to the exam, okay, so in exam, what you are required to do basically, when this type of question comes, first of all, over there, it is expected that you should have a basic knowledge of the you know the financial reporting framework which is applicable. If not, you can assume, let's say, Ind AS is applicable in this scenario, and based on that, you explain first what is the subsequent event as per SA 560. What is auditor's responsibility? Because at the end, it is the responsibility as an auditor in each case. You need to advise on that. So advise, like in event one, in event two, what is the auditor's responsibility? It will never change. See, whether it's an adjusting event, non-adjusting event, as we discussed in the example also, like in the standard also. If I go back to the standard, see, over here that we discussed, you have to perform, you have to discuss with the management, you have to determine whether the financial statement needs amendment or not. You need to inquire with the management that how they intend to address the matter if this requires an amendment. These steps will never change. You are required to do this, then only you will come to know whether this needs an amendment or not. And if needs an amendment, then this is the procedure. If does not needs an amendment, then you are not required to do anything further. So, but at the end, this is something is still applicable. The moment you are, getting aware about the fact, this is something you have to apply. This is something you have to do. Not 11, but 10 per se. I'm talking about 10. So once a fact is known, you will do this to understand whether this needs an amendment or not. So this is any which way is required to be mentioned as an auditor's responsibility. I hope I am clear with the point.
Yes, sir. Clear, sir. Thank you.
Yes.
And same way, you have to repeat that in the answer. You have to provide that in the answer. If this is a fact about, discuss all the three steps. Remember that I'm talking about. And if requires an amendment, then amend the financial statement and ask the management how they are going to do it. And then you do the analysis. What is the analysis of that particular one? Case one, case two, and then you give the conclusion. Like event two, no disclosure required. Event one, adjusting event, provision of 10 crores, whatever it is. Okay, based on your analysis, based on the case and everything, then you try to provide your answer. Clear? Any doubt?
No, sir. No doubt.
Okay, this was appropriately, this was purposefully taken to explain you how financial reporting framework can impact your auditing procedures, because at the end we have to audit and comment on whether the financial reporting framework is being complied or not. Your financial statements are as per the financial reporting framework or not, yes or no, whether it is providing true and fair view. Are you getting the point? So at the end, the objective is that only, and you cannot do anything beyond financial reporting framework. You are here to check whether it is something permissible by it. If yes, then whether the management is doing that or not. If no, then it's a problem. Okay. Again, like in both of the examples, you have a doubt, you can ask again. You can ask, multiple times, or whatever silly doubt it is, no matter, please ask. Even if it's a silly doubt, don't worry on that. Your clarity is most important for us. No? Okay, great.
No, sir.
Let's,
Clear.
yeah. So this was the standard SA 560 subsequent events. Okay. We have taken good questions on it for further understanding. And just a minute. I'll just go to the study material. Yeah. So this is a study material. This is a chart, very important. I will request everyone to go through the chart, to go to the standard bare text that is there. Plus, you have your test your understanding, given. Solve these questions. This test your understanding, because that will give you good understanding about the standard. And plus, further, you have more questions below. See, you have MCQs, additional MCQs which are given for you. Case scenarios you have with the MCQs. Then you have additional theoretical questions given at the end. And that is something is, going to help you much further when you solve these. Okay, so solve these questions, read it in detail. Okay, and if still there are any doubts, please ask as much as you can. There is no restriction on that. So for the next step, for the next lecture, I want to provide you, like, go through your essay 570. Very important. Essay 570 is one of the important and very crucial standard, which is on the going concern. We'll have a good detailed discussion. We are going to have a good detailed discussion on that. I will show you some, what you can say, going concern assessments, how they are done. Okay. And we will discuss on that also practically. We will solve some questions also on that. Plus, there is one more standard 580 with respect to the written representation. We already know we have multiple times discussed written representation, but still we will take it up and discuss further on that. For that, please read essay 570, 580. from the study material plus the bare text which is given. Okay, read it in detail, word by word, understand it, and then in the next lecture, if you have any doubts onto that also, you can bring it up. Okay.
Okay, sir.
Yes, sir.
Okay. So if no further doubts and if no further questions, I propose to keep the session till here, and then next session we will continue.
Okay, sir. Thank you so much for the detailed concept clarity. Thank you so much.
Thank you. Thank you.
Thank you.
Thank you. Thank you, everyone.
Thank you, sir.
Thank you, sir. Good night.
Thank you. Good night. Yes. Thank you. Good night.